Good morning, good afternoon, everyone. It's Ankit. Welcome to another brand new video. Today, I just want to do a video about a couple of tips that we can use and incorporate into our portfolio whenever we're thinking about investing into stocks. And these tips come from no other than the greatest investor, or one of the greatest investors, Warren Buffett himself. These are things that Warren Buffett said in the past, and he incorporates into his company, Berkshire Hathaway, Class A and Class B. And you can use these tips whatever way you want and incorporate them and learn from them to become a great investor like Warren Buffett himself. Let me know what your favorite tip or your favorite advice was from any investor in the world. Let me know in the comments below. So this video is going to help out any new, current, or even people that are considering investing, because these tips will give you the outside and the inside. Now, these tips from Warren Buffett can help you with your portfolio if you learn how to incorporate them, learn from them, and then apply them to whenever you're considering investing in a stock. So with all that out of the way, let's get into these tips. First, be fearful when others are greedy, and be greedy when others are fearful. As you can see, the current market is going down. A lot of that has to do with the interest rates hike and inflation. Number 2, investing is laying out money now to get more back in the future. So you're looking for opportunities whenever they can increase and provide more money and provide more value to the world. 3, price is what you pay, value is what you get. That is very important, and you should understand the difference between the two. 4, our goals as investors is to find an outstanding business at a sensible price, not a mediocre business at a bargain price. 5, it's far better to buy a wonderful company at a fair price than a fair company at a wonderful price. 6, never invest in a business you cannot understand. The value of a business is the cash it's going to produce in the future. So always consider free cash flow and how much they're going to get after selling, expenses, and all that other stuff. Minus all that, how much are they going to have left on their balance sheet? And then what are they going to do with that money? If a business does well, the stock eventually follows, and the stock will increase over time. Ignore the stock market, ignore the economy, buy a business you understand. So you can go out and invest in any company or majority companies that are public that you might use on a regular basis. For example, I know a lot of people use Amazon. Another one is Target, Walmart. A lot of people eat at Taco Bell. Especially a lot of Indian people, I know they eat a lot of Taco Bell and they always talk about it. A great investment opportunity occurs when a marvelous business encounters a one-time huge but a solvable problem. As we're going through different cycles and as things occur around the world, you're going to start realizing certain companies are going to have more demand because there's things that occur and that increase the demand over time. Risk comes from not knowing what you're doing. So if you're investing in things that you don't understand, you're just causing yourself to increase your risk, and your risk margin is going to be through the roof. Why diversification is only required when investors do not understand what they are doing. So there's ETFs, mutual funds, and all that can help if you don't understand what you're doing, if you're new to investing, and it can lower the risk of investing. Diversification may preserve wealth, but concentration builds wealth. So stay focused, stay laser focused, stay concentrated on trying to create wealth, and eventually you will. You only have to do a few things right in life, as long as you don't do too many things wrong. Remember, if you cannot control your emotions, you cannot control your money. That goes for any situation in life. If you can't control your emotions in any situation in life, it's going to cause you to do things that you don't want to do, or that's not part of you, or cause big mistakes and problems later in the future. Just like any situation in life, as long as you can control your emotions, you're always in control of that situation. Look at the market fluctuations as your friend rather than your enemy. Look at market fluctuations as your friend rather than your enemy. Profit from a folly rather than precipitating in it. Whether we're talking about stocks or socks, I like buying quality merchandise when it is marked down. And that's the same thing with anything in life. When things are marked down, you're looking for quality, not quantity. Cash combined with courage in a time of crisis is priceless. And currently, we're looking at a crisis right now with interest rates going up and with also inflation. So this might be an opportunity for you to capitalize on this opportunity. Don't pass up on something that's attractive today because you think you will find something better tomorrow. In my view, for most people, the best thing you can do is owning the S&P 500 index fund. It is simple, it's diverse. You're owning a bunch of different companies that are going to work for you even when you're at home, even when you're at work, or even when you're enjoying your daily life activities or your hobbies. It can't get better than that. While they're doing all the work, you're getting paid. And also, I say there's really, really low risk with the S&P 500 because there's no way in the world that all of these companies are going to fail. And you investing in the S&P 500, you're owning all these different companies. So the risk is real low. The rewards are great. The S&P 500 has shown to increase almost every year. And if you stay in the long haul, you're guaranteed almost profits. As always, though, this is not financial advice. This is just for entertainment purposes only. And this is just a video that I wanted to create because there's a lot of information that's valuable and a lot of people need to learn. If you're a new investor, current investor, or looking to invest, all this can be very helpful. The stock market is designed to transfer money from the impatient to patient. So just wait for the perfect opportunity when the stock drops at a nice price. Find a good entry point. Hold on for the long term. It's the time in the market, not timing the market. The true investor welcomes volatility. A wildly fluctuating market means that the irrational low prices will periodically be attached to a solid business. Only buy something that you'll be perfectly happy to hold if the market shut down for 10 years. Or even 11 years. Just be fine with holding it and believing in this company and believing that it can come back and bounce. Our favorite holding period is forever. You want to try to hold these companies forever, especially if the companies have demand, quality service, quality products that they're delivering, great customer service. Never have to worry about them going out of business. And a great balance sheet, free cash flow. If you're thinking about owning a stock for 10 years, don't even think about time is the friend of a wonderful business. The most valuable thing that any of us have is time. And the second most valuable thing we have is health. And good things take time. Rome wasn't built overnight. Much success can be contributed to inactivity. Most investors cannot resist the temptation to constantly buy and sell. And these, sometimes, there's day traders, swing traders and all that. They're just trying to make the money. But at the end of the day, keep in mind that you will have to pay a lot in taxes. And a lot of the money goes to the government if you're day trading and swing trading. and there's also more risk involved. But that's up to you. Everyone's different. We all have our own strategies, and there's a lot of people that make good amount of money day trading and swing trading. The three most important words in investing are margin of safety. The investor of today does not profit from yesterday's growth. In the short run, the market is a voting machine. In the long run, it's a weighing machine. Buy something for less than it's worth. It's as simple as that. You just find something that's undervalued and you hold it, and it becomes more valuable over time. Widespread fear is your friend as an investor because it serves up bargain purchases. When investing, pessimism is your friend. Euphoria is the enemy. The most common cause of low prices is pessimism. Sometimes pervasive, sometimes specific to a company or industry. We want to do business in such an environment, not because we like pessimism, but because we like the prices it produces. The United States endures 2 world wars. The United States endured 2 world wars, other traumatic and expensive military conflicts, depression, a dozen or so recessions, and the financial panic, oil shocks, a flu epidemic, and the resignation of a president. Yet the Dow rose from 66 to 11,497. The years ahead will occasionally deliver major market declines, even panics, that will affect virtually all stocks. No one can tell you when these traumas will occur. I think the worst mistake you can make in stocks is to buy or sell based on the current headlines. Speculation is the most dangerous when it comes to the easiest. The best thing that happens to us is when a great company gets into a temporary problem or trouble. We want to buy them when they're on the operating table. Opportunities come infrequently. When it rains gold, put out the pocket, not the thimble. The best chance to deploy capital is when things are going down. It is best an ideal period for an investor. A climate of fear is the best friend. Those who invest only when commenters are upbeat end up paying a heavy price for a meaningless reassurance. You'll get very rich if you thought of yourself as having a credit card or having a card with only 2 punches in a lifetime, and every financial decision's used up 1 punch. You'll resist the temptation to dabble. You'll make more good decisions, and you'll make more big decisions. You'll get very rich if you thought of yourself as having a card with only 2 punches in a lifetime. Every financial decision used up 1 punch. You'll resist the temptation to dabble. You'll make more good decisions, and you'll make more big decisions. American business, and consequently, a basket of stocks is virtually certain to be worth far more in the years ahead. We always live in an uncertain world. What is certain is that the United States will go forward over time. For 240 years, it's been a terrible mistake to bet against America. Now is no time to start. You got to understand accounting and other various principles for accounting, balance sheets, free cash flow, expenses. It's got to be a language to you. If you don't find a way to make money while you're sleeping, You will work until you die for a company that you don't even like, or a company that can replace you tomorrow. Believe it or not. Your best investment is yourself. The more you learn, the more you earn. The more skill sets you're going to have. The more value you bring to whatever you're trying to do in life. So always keep that in mind. That's something I always say on my channel. Always invest in yourself. There's courses you can take. You can get free courses on YouTube. Just be careful who you get the information from. And then all you have to do is apply all the stuff you learn to your life. And it'll change your life around completely. Money saved is money that can be invested to grow over time. In the world of business, the people who are most successful are those who are doing what they love. So make sure you're doing what you love, what you're passionate about, and what you really care about. Don't do it because other people are telling you to do something. And make sure you value whatever you're doing, because if you don't, then you're wasting your time. And you're going against what you value. It is better to hang out with people better than you. Pick out associates whose behavior is better than yours, and you'll drift in that direction. So you'll adapt to what they're doing, and eventually that'll become natural to you, where you're just doing whatever they're doing, and you become like them when it comes to that work. I believe in giving my kids enough so they can do anything, but not so much that they can do nothing. So these are all the amazing things that you can learn from Warren Buffett. And you can incorporate them in your life, and it's going to put you way ahead of all your competition. It's going to make you a better version of yourself. So make sure next time when the GOAT speaks that you listen. And for those of you that are new, or if you're a current subscriber, thank you. For those of you that are not, make sure to hit the subscribe button and the like button and share this with your friends if you found this video to be helpful and you learned something from it. And if this is going to help you become a better investor. Thank you for all the love and support I've been getting on this channel. I can't wait for you guys to see the future content that I make.